gas, a fascinating energy source that's making a lot of trouble, but also is really, really exciting. If you look now at the daily chart, we see that we, since beginning middle of December, had a downtrend, and especially at the middle of December, a clear downtrend up to 3.62 after we, in the middle of April this year, started with a big uptrend until October, before the market started to stop and consolidate, and the first downtrend patterns has been established. Well, what is the reason? Before trading natural gas, you need to understand the natural gas cycle and also the so-called seasonal pattern and trading guide, as natural gas is really a fascinating energy source, and it accounts for almost a quarter of total US energy consumption. Its market share is likely to expand because of the favorable competitive position of gas in relation to other fuels and tightening environmental standards for fuel combustion. Well, industrial users and electric utilities together account for 65% of the market. Commercial and residential users combined are 35%. It is primarily methane, the lightest hydrocarbon molecule, and it is burned to drive turbines in electrical power generation plants, as well as to heat homes and business across the nation, and is used as a feedstock to produce the agricultural fertilizer ammonia. And this is especially very important as it is one of the most important economic commodities in the US today after crude oil. Recent and also substantial discoveries of shale gas have flooded the US market with supply and kept prices weak. And this market has a strong seasonal tendency to bottom in July and then peak in December, like now. The main reason for this can be explained by the fact that in cold weather it is used to heat homes, and business and production companies are building inventories ahead of this season. Then, as production companies anticipate the need for utilities companies to produce more electricity to handle spikes in demand for air conditioning, we see prices rise in early summer again and then continue to rise through year end when we begin the winter heating cycle. And now if we take a look at our 4-hour chart, we see that natural gas markets have rallied a bit during the trading session on Wednesday, but they continue consolidating at extraordinary low levels after a massive sell-off, and that they are now building a good ground at the 4-hour chart, for example. If you see now the 4-hour chart, we see yes, we are in a good long position setup. The market may come down to prices around 3.32 to, well, I say also to $3 before it rallies again. This is the downside of the coin. On the other side, if the market breaks 3.83, then it will rally to 4.13. It comes back to the previous support and bounces up again double time to over 4.5 and so on. And on this other side, there are some who are saying that the previous winter of the United States was mild, but the fact is, what is the real or the upcoming winter of this year? And that's exactly that matters. That's the reason we have closed our natural gas position already, our short position, and we are long now at 3.79. This is half position. If the market comes down to 3, we go full into the market long. Our first stop, protection stop, is at 3.62. So, have a good day and watch also this market very closely.